Hello everyone, and welcome to this week's Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. With Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Well, I think everybody will be happy that Easter's now done and out of the way. I think there was a lot of questions in terms of the impact on the automotive sector, Curtis, this week.
Yes, well, I was a little bit concerned because we've now had 2 short weeks in a row, and I thought, there's not going to be many headlines to talk about. But I was wrong. We've got headlines aplenty on today's pod.
We have. It's going to be a busy one, but we'll try and keep it tight this week because it was a long one last week, and I think not to drop too much into it, but next week will probably be another nice long one for you with some great content. So we'll try and keep this week a little bit tight. But as we shouted out about recently, the Barbara Cox Woman of the Year Award 2024 is still open. So again, if you've not got involved with this and you'd like to get involved with it, then you can still get your nominations in. It's for anybody that works within any woman that works within the automotive industry that can be nominated, and that the closing date for the nominations is Friday, the 26th of April 2024. There is a media release in the AM online that gives you further details of, who has been previous winners, what you get as a reward of winning the Barbara Cox Woman of the Year. But more importantly, it gives you a link as well where you can follow the details and submit your nomination.
Yeah, and this has now been running for 6 years, and there's been some really good winners over those years. So what we'll do is we'll include a link to that story that you mentioned in AM on our newsletter that goes out Monday morning. So if you want more details on the Barbara Cox Woman of the Year Award, do look out for the newsletter and click on the link.
And as we said there, we have got a big industry name, hopefully, that will be joining us next week on the podcast. It'll be a debut, I think, Curtis, to the podcast.
It will, yeah. We don't actually want to tempt fate, do we? Because we do set up interviews, and we hope that they come off. Sometimes they don't. Sometimes they get rescheduled. So we'll keep our powder dry on this one.
We will, because we know what the market's like. We know how quickly the industry changes and things like that. And when you are talking to these industry leaders, they have very busy diaries that can change in an instant. So we'll tease you more once we've got that confirmed and diarised and done. So keep an eye out for that one.
You're listening to the Motor Trade Radio podcast, powered by Motors.
Well, as I said, Philip, we have got a lot to get through this week. So headlines this week are from AM, Car Dealer, the Financial Times, Sky News and Motor Trader. And we'll start with the SMMT reports new car registrations rise in March for the 20th month in a row, but retail demand remains sluggish. We'll also look at the latest figures for van sales, LCV sales in March. Used cars sold faster in March as buyers benefited from ongoing price realignments on younger models. Tesla and BYD sales fall as concerns mount over electric shift. We'll be asking the question, is US dealer group giant AutoNation considering an offer for Inchcape following its failed move on Pendragon? Motorpoint bounces back after a strong Q4, and Dicksons of Inverness completes multi-million-pound MBO.
You're listening to all the chatter that matters on the Motor Trade Radio podcast. If If you're a supplier and would like us to profile your business and reach our audience of dealer bosses, managers and decision makers on one of our dedicated supplier specials episodes, get in touch with Curtis and Philip at motortraderadio@yahoo.com.
So as Curtis has pointed out there, the first story we're going to head over to with the new car registrations out this week alongside the new LCV registrations as well is over to AM. That the title is that sluggish private new car market and shrinking EV demand signal challenges for 2024. Now this is that the SMMT has said that a sluggish private new car market and shrinking EV demand signals the challenge of 2024, despite a 10.4% growth overall in the plate change month of March. But obviously the private demand for new cars fell by 7.7% during the month of March, and while fleets drove overall growth across the market to 10.4%. So it's kind of a optimistic performance from a growth, but not for the right areas, Curtis.
No, and it's worth sort of looking at some detail about that split between retail and fleet, because March was always going to be the key month of certainly Q1 and probably of the year to reflect what the consumer, what the retail demand is at the moment. So, as you say, retail down 7.7% for the month, and market share year on year is actually down from 48% to 40%. So if we look at fleets were up 30% for the month, and market share year on year is up from 49% to 57%. So we can immediately see where the growth that's propelled March's registrations have come from. And if we look at year to date, so Q1, private registrations are tracking it down 9%, with a market share down from 46 to 38%. And also looking at fleet for the same period, year-to-date Q1, fleet is up 29% with a market share that's grown from 51% to 60%. So the market is. I mean, we've said this over the last 2 months, but the market is really being driven by fleet at the moment.
It is, yeah, and that's been highlighted a few times now. That how long can the fleet market both sustain the growth and sustain the transition to EV, because although it's not broken down in terms of fuel type into each of the sales channels, the reports are that the registrations for EV are tending to go in the majority into the fleet sector. And talking about the EV sector, and they say Mike Horse points that out from the SMMT, March from a BEV has actually shrunk year on year from a share from 16.2% in 2023 down to 15.2% down in 2024. Plug-in hybrids, a marginal increase from 6.2% market share to 7.7%, but that takes the year to date for full battery electric vehicles from a 15.4% market share in 2023 for the first 3 months of the year, just up to 15.5%. So only a 0.1% market share for battery electric vehicles. A little bit better increase for plug-in hybrids from 6.4% market share to 7.8%. But the concern is now that with the ZEV mandate this year, and now the first biggest play of the year in the month of March and the first quarter of the year, which is a significant period for the sector, that the battery electric vehicle sector is only showing a 15.5% market share, and we know that the ZEV mandate requires the cars to be at 22%. Albeit it isn't quite as black and white as that because of credits and because of borrowings and future debt and things like this that take place. But there's a big job to do there, isn't there, and a gap to fill.
Yeah, and are there enough months in the year to actually fill that gap? That's the question that needs to be asked, and yeah, we will know over the coming months. But that requires a huge change in momentum, doesn't it?
It does, and I know that a lot of the focus, you only need to look at some of the deals, the incentives and activity around battery electric vehicles at the minute from the OEMs. They are putting a lot of money behind EVs. There is some very, very attractive EV incentives for new cars at the minute within the sector, but it just doesn't seem enough to get that private sector moving. If you've got the private sector moving alongside what's happening in fleets, then we could be a little bit closer to where they need to be for this time of the year.
Yeah, and Mike Hawes sums it up rather neatly by saying market growth continues, fueled by fleets investing after 2 tough years of constrained supply. A sluggish private market and shrinking EV market share, however, show the challenge ahead. Manufacturers are providing compelling offers, but they can't single-handedly fund the transition indefinitely. Government support for private consumers, not just business and fleets, would send a positive message and deliver a faster, fairer transition on time and on target. So that's really Mike Hawes reconfirming the SMMT view, because they have been calling out for retail incentives for a long time now, and it seems to be falling upon deaf ears.
They do. And just before we talk about LCVs, we've got some of the European international performance through, which puts the UK in context a little bit. So France is down 1.5% year on year to 180,000 registrations. Italy down 3.7%, down to 162,000 registrations. Spain a little bit behind that at 4.7% down to 94,800. We are still awaiting Germany. I've not had sight of the German figures yet, but the US is up to 1.4 million in the month of March there, Curtis, up 4%. Yeah, we're a little bit behind US registrations.
That is pretty impressive going, isn't it? So yeah, van registration. So as we record this, this hasn't actually been covered by the media. So just working from the SMMT press release on this. So as we said, the car registration market grew by 10.4% in March, but also coincidentally 10.4% in the year to date. So how's the van market fared? It actually grew by 11.1% in March to just shy of 53,000 units. And it's actually the best March performance for 3 years. And growth in uptake of all LCVs besides medium-sized vans, which is a good signal, with the largest models actually up 16%, as demand for smaller vans bounces back with a pretty substantial 45% rise.
Yeah, no, I think it's some. I mean, the van market is still, in particular the used vehicle sector, is still very, very strong at the minute. So still a lot of appetite there for commercial vehicles, and I know production has continued to increase for the commercial vehicles as well. So again, positive results there for commercial vehicles, alongside what's been happening with the car market. But yeah, similar to cars, with a battery electric vehicle market share of 5.2% in the first 3 months of the year, the first quarter of the year, against a ZEV mandate target for 2024 of 10%. So still a bit of a gap there in the vans to close that gap on the ZEV mandate for the year for the manufacturers.
Yeah, definitely, because BEV registrations for the month, although they were up 15%, it only counted for 2,906 units. So there's still a long, long way to go there.
Yes, definitely. So going over to the world of dealers, and we're going over to Car Dealer here, and this is that dealers cutting prices helped speed up sales of used cars in March. And this is that the used cars took just 35 days to sell in March, quicker than February 2024 and March of last year. Dealers realigning prices helped with speed of sale. Electric cars were some of the quickest to sell, and the average used car prices on March dipped to 16,766. Now, I know this is research from Motors, isn't it, Curtis?
It is, yeah. So this is the monthly Motors Market View, which I helped put the press release together on this one. So I did see the data. And as you say, used cars average just 35 days on both physical and online forecourts, which is 6 days less than February and 2 days better than 12 months ago. So some encouraging signs there in terms of speed of sale. And the report actually showed all retailing sectors achieved faster month on month and year on year sales. So that's across franchise dealers, independent dealers, and car supermarkets. And I guess one of the most sort of interesting trends that emerged over the course of March was that overall the fastest sales were achieved by cars in that £10,000 to £15,000 price band. So the average there was 30 days. And if you look at the price band above, 15,000 to 20,000, it was 32 days. So cars aged between 2 and 5 years also dropped by 11% year on year in terms of price. So that price dropped from it actually dropped to £19,505. So I think what we're seeing is with those prices coming down for 2 to 5 year old cars and falling very much into those price brackets I was talking about, consumers are starting to snap up these cars because they do look like good value.
No, yeah, and that's right. And I know there's a comment there from Lucy Tugby, who's the marketing director of Motors, said that improved days to sell highlighted the appetite of in-market buyers to purchase in March, as well as showing the agility of dealers smartly sourcing stock and pricing competitively. So I think clearly the message here that if you are monitoring your prices, you're prepared to move your prices, and you've got the right profile in terms of those age bands and price bands as well, then you can take advantage of the market demand and speed of sale.
Yeah, definitely. So moving on and going back into the EV world, the next headline is from the Financial Times. And the headline there is Tesla and BYD sales fall as concerns mount over electric shift. So this is very much a global story. It's not UK centric, but it's worth looking at because it is highlighting a trend that certainly been emerging over recent months. So the report in the FT says that Tesla and BYD both reported sharp falls in electric car sales, adding to concerns of that slowing shift towards electric vehicles that we were talking about in the first story of the SMMT registrations for March and year to date. So both companies, which are the world's top two sellers for EVs, have cut prices in order to stimulate demand as they face increased competition, especially in China. And that's particularly significant because although we've tracked the Tesla price cuts over the last 12 or more months, we're now starting to see BYD employing similar tactics in other markets.
I mean, this is the concern. I mean, I think the share prices also took a bit of a dip when the performance figures did come out, Curtis. But yeah, I think this is going to be the problem. And I think, you know, as you say there, this is definitely a global story. But as we know, what happened when Tesla started to do their price cuts back in October 2022, forget that year, right? So, you know, we know what happens there. We know the impact that it had on the sector globally. particularly when it started to impact the used vehicle market as well, in terms of that defleet and the fleet and leasing sector. So, you can see this playing out now, that there is, a war taking place between BYD and Tesla of who's going to, take the dominant share, and if they are failing to meet their forecast commitments. And the answer is to cut prices, to drive through volume. So yeah, this one isn't going to end now, is it? This is going to play out for some time, I think, now, because certainly they both got that mission to achieve their volume production targets, and by doing that, they'll obviously, it's all about market share and volume into the sector.
Yeah, and final point on this story, there's a lovely line that within the report that's written by Peter Campbell, that BYD has actually slashed the cost of almost every model in its lineup since the start of the year, under the slogan, "Electricity is cheaper than oil." Yeah, well, I think we'll see about that.
Yeah, we'll we'll keep you updated as this one starts to play out, but I'm sure we'll see the impact on it soon.
You're listening to all the chatter that matters on Motor Trade Radio, powered by Motors, the driving force behind multi-site advertising. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand wherever you are on your podcast feed.
So next headline is from Sky News, and Sky News had the exclusive on this. I noticed it was picked up afterwards by Automotive News Europe, but this is very much a Sky News report, and the headline is US giant AutoNation eyes driving seat at Inchcape, UK. So this is New York listed car dealer AutoNation is plotting a bid for the UK operations of Inchcape. And it goes on. Sky has obviously got some very good sources here, because it says Sky News has learned that AutoNation, which has a market capitalisation of nearly £5.5 billion, is among the suitors circling the business since Inchcape confirmed in January, which we reported on the pod, that it was conducting a strategic review. Now, AutoNation is said to be at the early stages of considering an offer and may yet not decide to proceed with one, according to industry sources. But if it goes ahead, it would represent a first step into the UK for AutoNation. And of course, this follows 6 months after that bidding war for Pendragon, which AutoNation bailed out of. And it's obviously got, it has got those resources, hasn't it? It's got that cash if it wants to make another move on a UK group. The next headline is from Motor Trader, and it is Motorpoint records continued momentum and profitability. So ahead of announcing its final results for the year ended 31st of March, Motorpoint has highlighted the strength and profitability of its performance during Q4. So this is the result of continued margin recovery and retail volume up, according to the group, by around 9% year on year. And Mark Carpenter, CEO of Motorpoint, says, "I'm delighted that the difficult conditions experienced in 2023 have eased in Q4. And combined with our focus on driving operational excellence through a program we call Brilliant Basics, has meant that Q4 was characterized by consistent profitability." So this looks as though Motorpoint is turning a corner, because it did have a tough 2023, didn't it?
It did, yeah. I mean, they were hit obviously quite heavily, if you remember, from the EV realignment prices, and whether that was triggered or not triggered by the Tesla price adjustments. They felt the pain because they had entered the EV market as a used car supermarket quite heavily, and rightly so, to move that used EV sector. But they felt the pain when those prices obviously then realigned, and then everything that went on in terms of the market adjustments, in terms of trade values, etc. They did feel some pain through that period. But it sounds like, and very optimistically, they have turned that corner. And as you say, they're doing the brilliant basics, which is really referring to lean cost base, faster stock turn, lower prices, and probably really what you probably imagine what a supermarket is all about. It's that volume, isn't it? Low margin, low cost base, and volume throughput around this. So it's optimistic because I know that there was concerns about the Motorpoint at the time, but positive outcome for them.
Yeah, definitely. And Motorpoints, they are the biggest player. They're the biggest car supermarket in the UK. So very much a barometer for how supermarkets are performing. And it does go on to say in the report that consumer demand has picked up across the group, and Motorpoint was able to benefit from enhancements to its digital presence, which generated further website traffic. So it looks as though those brilliant basics, that program is starting to pay off, and it'll be interesting to see what the full year looks like once they close the books at the end of the month.
Yeah, 100%. And over to the final story of this week, and that's on AM Online, and that Dicksons of Inverness completes multi-million-pound MBO. And that's that Dicksons of Inverness has completed a management buyout and is now targeting a turnover of double to 100 million within 5 years. And that the company is currently based at Telford Retail Park in Inverness, although its origin lie in Perth. And that Dicksons Motor Company was founded by Tommy Dickson back in 1957. And that was running several dealerships across from Dunblane there. So, yeah, I mean, great business, obviously looking at buying out that family business, and particularly, what they've targeted for that turnover, Chris.
Yeah, definitely. As you say, very well established. They represent Nissan, MG, Suzuki, and Kia. And they've actually grown by acquisition in recent years, because they purchased Duncan's and RM Brown's, which added the MG franchise and gives them 5 dealerships. And as well as that, they've created their own Car Czar brand, which is their multi-brand used car operation. And in addition to that, they've also launched Dicksons Parts Direct, which has added Peugeot, Citroën, DS, and many other parts manufacturers, making Dicksons the biggest privately owned parts supplier in the Highlands. So, yeah, a really good move here. And it's great to see the company moving into that management ownership.
No, you're right, and this is the MBO has been in the offing, saying for some time that the company appointed Linda McPhee, Jamie Dunlop, and Douglas Laird to their board in late 2022 as it prepared to take the next step.
Yeah, definitely. A £50 million turnover, and they're looking to double that. They say they've got a 5-year strategy to grow to 100 staff and hit that £100 million turnover target. So, we wish them well on that journey.
So as I said there, busy week of headlines for a very short week, particularly at a month end and a quarter end around Easter, but certainly not slowing down in the sector there. So some big headlines, and we're probably expecting a lot more again next week, Curtis.
Oh, definitely, yeah. But that's all for now. So many thanks for joining us on the Motor Trade Radio podcast. We're hopefully back on Tuesday with that special weekday interview pod. So until then, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. We'll be sharing all the URLs from this week's headlines on Monday morning. To make sure you receive them, just subscribe to the free newsletter on our LinkedIn page. Just search Motor Trade Radio Podcast.